Kitco News is at the San Francisco Hard Asset Show, and joining me now is Pamela Aden of the Aden Forecast. It's a newsletter that's been named #1 newsletter by MarketWatch in 2010, and she's been bullish on gold till 2002. Let's see what she tells us today. Pam, thanks so much for being with me.
Oh, it's a pleasure to be here. Thank you for inviting me.
So bullish on gold since 2002. What's your stance today?
I know a lot of people might be afraid of it because it's been 12 years now in the bull market. But I think, in fact, right now, in these months, the last few months and now, is a good time to buy. It's an intermediate low area. Okay. That's a good time to buy. There's many reasons why the bull market is still solid. It's still strong. There's really nothing saying the bull market is near an end. It's not near maturity at all.
Okay, but Pam, how about the U.S. dollar? It strengthened today. It's at a 2-month high U.S. dollar index. Could that not play a role in hurting gold?
It could put a damper on gold, just like it's been over the past year. Gold's been in a downward correction from September of 2011 till now. And yes, it's been quiet, but actually gold's only fallen not even 20%. It's been 19-some%, and the big fall was 3 months worth, and it's been holding above that 1536 level. That's an important, very important level for gold in dollar terms. Okay. And of course, in other currency terms, it's been very strong. But no, the dynamics have changed since 2008 as far as that rigidity. If you look at the dollar as an index versus one currency. If you see it just versus the euro or the Swiss franc, of course, that opposite is still going on. But so I think that you can have a firm, not strong necessarily, but firm within a certain band and dollar and still have a very bullish gold price.
Okay. And you said, interestingly, it's a good buying time, so you don't think the price is high right now? You wouldn't wait for another correction?
Well, we could see a little bit more correction since we've seen this fall off lately, especially in gold shares, along with the stock market. So all the insecurity of the fiscal cliff, since it's right here, is very much going to make the markets more volatile, I think. I think that's what's certain is volatility over the next month or two, or maybe even longer. But I'd say buy on weakness, take advantage of weakness, and buy low now, buy on weakness.
So you mentioned fiscal cliff. How do you think that's going to play out? Is it going to be a kick the can down the road scenario, Pam? What do you think?
I think there's no choice. I think, yes, definitely. I think it might be the midnight hour, let's do it at the last minute, and everyone's feeling relieved. But no, they can't let it. They won't let it go.
So you're bullish on gold. What are your thoughts on silver?
Oh, I'm even more bullish on silver.
Okay.
And I think that silver has more potential percentage-wise to rise more than gold. And we're looking at 32 as a very good level for silver, if you can get into that or even lower for now. Also saying it's in a good buying area.
Okay, so that's an industrial metal. Are you bullish because you see growth rising in China, or what leads you to be bullish on silver?
Oh, well, first of all, technically it just looks better than gold. Okay. Like that sounds a little simple, but it does look better than gold just looking at it. And yes, we'll see that right now you wouldn't imagine that any kind of strength could happen in the world today. Right. But then if you look at QE3, you look at the ECB, and you look at all the liquidity that's happening, and you look at interest rates staying low, you look at a few important things. Real interest rates staying very low. These are all very bullish things for gold and for silver, and for a better possible outcome in the world to at least get over their serious problems.
What trading range are you looking at for gold as we approach the start of 2013?
Well, there's a couple levels I'm looking at. Right now, 1705 is more short term. Okay. 1680 is another important one. On the downside, 1536 would be the max, which is probably unlikely. But those are the numbers. On the upside, 1800, of course, is important. Okay. Right now, holding above, the 1700 level, we can see 18 come up. Okay. And then 19, of course, and then, say, 2200 after that.
Do you think 19 is plausible before year end?
If we see a lot more tension in the Middle East, we see a lot more insecurity due to the fiscal cliff and due to Europe's debt problem, and China still shows some sluggishness, I think we could possibly see that.
All right.
Yeah.
Pam, thank you so much for your thoughts today.
And thank you for having me. It's been a pleasure.
And thanks for watching our coverage from the San Francisco Hard Asset Show. We'll have more video coverage for you on Kitco.com. In the meantime, you can email me any comments or questions at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thanks for watching.